In the evolving landscape of financial services, mortgage lending stands at a critical intersection of risk management, customer experience, and technology innovation. Mortgage lending in India has traditionally been a complex, document-intensive process. With increasing digital expectations, financial institutions are under pressure to reimagine their risk assessment and loan origination strategies. Today, we are exploring how strategic tech implementation can fundamentally transform lending operations. Our guest today represents one such organization which has embarked on transformation journey. Welcome to CRIF Talks, a platform where you explore the human side of technology innovation in financial services. Today, we are privileged to have Mr. 𝐒𝐞𝐧𝐢𝐸 𝐷𝐻, Chief Risk Officer at Fedfina, who will share insights into the digital transformation they have embarked on.
Thank you, Rahul, for having me here.
So before we dive into the specifics, if you can help us connect between your transformation journey and Fedfina's broader vision of empowering emerging India with easy access to credit.
Home aspiration and the business expansion over the last decade has transmitted from urban areas to the rural areas or tier 2, tier 3, tier 4 markets. Our customers today are expecting that they get the same wow factor which they are getting on day-to-day activities as well. Our consumers, whether they are young professionals or the entrepreneurs in the emerging market, they deserve a seamless, transparent and efficient lending experience. Our mortgage operations was traditionally paper heavy as well as manual intensive, and which was taking a number of, the TAT was very high. It was taking around 7 to 10 days or 15 days at times, which we want to solve that piece of problem. And that's the reason we have moved on, or we have adopted a new LOS system as well as a new BRE platform. Our vision was very clear that we wanted to transform from a process heavy organization to an insight driven agile financial institution. Our legacy system was not supporting us, and hence we have opted for a new LOS as well as a BRE platform so that we can achieve what we are intending to.
Of this, it's a general belief that a dedicated business tool engine, or what they call it, a decisioning platform, is a tool for unsecured loan product where you can set up a STP journey. While Fedfina is in a mortgages business, where this thought emerged of keeping a business tool engine in your overall tech transformation project?
See, in today's lending landscape, Rahul, whether bank or NBFC or fintech, everyone needs to have the business rule engine, and that is required for not only unsecured product, for across the products, because that is the essence and that is the backbone. It helps us in precise decision making, reducing the TAT and ensuring that there are STP journeys which are there. For mortgage, while we understand people have not thought of that, or certain people have attempted that, but even for mortgage that can be done up to a certain level, say like financial sanction. Our journey was not just about tech implementation, it was about transforming our approach to mortgage lending. We saw an opportunity to leverage technology as a strategic decision making platform, addressing multiple critical challenges, and which will help us in multiple aspects, like there is critical or timely decision making, the uniform decision making across the location, removal of human bias which is there, reduction of the TAT, scale up of the businesses, as well as ensuring that policy and compliance is also there. Our implementation strategy was fundamentally collaborative. We brought together risk experts from our internal team, credit and operations team, IT team, plus few of the vendor partners who supported us in terms of the LOS and the BRE. So by creating this integrated ecosystem, we were not just implementing a technology solution, we were co-creating a transformative approach to mortgage lending. Our vendors become our strategic partners in our digital transformation journey. This approach helps us in achieving certain objectives, which is like scaling up the operations, ensuring policy and regulatory compliance, maintaining decision across the locations or uniform decision across the locations, and minimizing errors. We now have the flexibility to adapt swiftly, and our guys in a position to write the rules very often, and which is like quick go to market as well.
So banks and NBFCs are often seen hesitant of attempting something like a tech overhaul, especially when they have a limited resources which are already occupied in their day-to-day operations. They have a business which is at certain scale. What I want to understand is that when you decided about the parallel implementation of LOS and BRE together, what was your approach or a thought behind it?
So our expansion strategy demanded a technological overhaul. As we were scaling up our branch network as well as sourcing team, we recognized the immediate need of a technology solution, which was in terms of the new LOS and the new BRE, and that has helped us so that there is no constraint in our future endeavors. We were strategic in our approach. We formed a dedicated yet compact team to manage this transformative project. We were very clear that this will be requiring and will require a hell lot of manpower, stakeholder management. The parallel implementation was not just a technical decision but a strategic move to align our technological capabilities with our business expansion plan. Although the implementation looks very easy, but it was not the case, Rahul. We need to take a number of decisions where we need to deprioritize certain existing projects, certain other activities, so that we can reap the benefit of this new project.
I think this clearly explains the role of business rule engine in mortgages business. I think you articulated very well that why Fedfina has embarked on this transformation journey and what kind of long-term benefits you will be reaping out of this. Thanks so much for this insightful session, Avdesh. We really thank you for taking time out for this discussion. And that's the end of this episode of CRIF Talks. Stay tuned for more such stories of innovation and transformation.